Quint.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts and Vineeta Sharma of Narnolia Financial Advisors, along with independent advisors Sharmila, Joshi and Vivek Mavani join me on the show. Many thanks to all of my guests for joining me. Today on Hot Money, we'll discuss what's happened with NBCC. The counter has corrected almost 75% from its peak. So what's gone wrong with it? So we'll talk about NBCC. We talk about what's happening with Apollo Hospital. Post the number, the counter has managed to move up significantly. Is the concern of pledge share over now, and will this counter need to be accumulated? That's something that we'll ask. We'll discuss the multiplex, because what happened with Reliance's AGM and Jio's upcoming premium feature on first day, first show. Movies was the big talking point of why multiplex stocks fell in trade. And last we talk about the impact of slowdown of auto on auto ancillary. Is there any auto ancillary that we need to accumulate at this point of time? But before we go to analysts, let's get in Nikki Mirchandani to understand what's impacted NBCC and what's caused the big fall there.
Well, if you look at the monthly performance, we've seen almost a 35% kind of a downtake for this counter, and year-to-date basis also the stock has fallen as much as 42%. Couple of factors which are actually leading to this sharp fall in the stock price of the company is mainly got to do firstly with the way Q1 numbers have panned out. Dismal show yet again reported by the company. Top line, it's a 16% decline there. Net profitability of the company too has slipped by 38%, and the operational performance of the company has been disappointing on account of lower execution. EBITDA is down by 65% for this counter, down year-on-year basis on consolidated level. Margins for that matter, they have shrunk to less than 1.5% to kind of 3.5% level that we saw in the corresponding quarter. With regards to its Amrapali project, which has always been a bone of contention, the company in its con call reiterated the fact that it's not going to be investing in any more further money in Amrapali project, which is a project that requires a cost of around 8,500 crore and will be arranged by Supreme Court itself. The company would be working on commission basis, commission at a rate of around 8% for that matter. The company, however, stated that it will take at least a span of good 4 to 5 years to complete this project. This is way different than the initial claim made to the extent of 36 months for that matter. The company is sitting with a huge pile of order book, but then in terms of execution is really slow for this company. Two things that have been plaguing this counter to an extent will be the analysts estimate the company to this time around again miss the guidance that it has forecasted for FY20, which is a 20 to 25% kind of growth on the top line level, and the change of guard because there will be a new MD which will be taking in position from October onwards, and that is unlikely to yield any immediate results as per a stockbroking note from Antique.
Okay, that's the view that's coming in on NBCC. Vivek, what's your sense? We know what went wrong. I think a lot of stress came in because of this Amrapali project. The management has now clarified that they will not construct it, but they'll be project management consultants to the entire thing. Will this soothe nerves? Because at one point, NBCC was one of the best performing PSUs, and suddenly everything's gone downhill.
Well, I really wish that this Amrapali issue, which is a difficult challenge for NBCC to deal with, given the kind of investments that to be made, and it is much easier to say that Supreme Court will arrange for the money. Actually, I mean, logically speaking, how is Supreme Court going to arrange for the money? Somebody else has to come in as a financer to complete those projects, and there still remains a question mark. However, I'll reserve my comments as far as NBCC is concerned because I don't track it very closely, barring the news flow, but no detailed personal analysis on NBCC, so I'll reserve my comments at this point of time.
Okay, what's your sense, Vineeta, on NBCC? Is it a good time to start accumulating, and what's, according to you, gone wrong significantly for the counter?
So there are 2-3 reasons. One is the Amrapali issue, which has been an overhang on the company, and secondly, there were 3 projects in Delhi that they were doing, and all of them were stalled. 2 of them, I think Sarojini Nagar and Netaji Nagar, they have kicked off. So execution should start. Like initially, we were expecting that execution should have started by March, but till now it has not started, and that will give the boost to revenues. going forward. That is still delayed. And there's another project which is also another big project of Nauroji Nagar that is also not cleared the environmental clearance. So 3 big redevelopment projects are not getting executed, which is an important contributor to the top line for NBCC. And then the Amrapali, wherein the Supreme Court has said that okay, the home buyers who have not paid full amount, they need to come up. So some out of 8,000, some 4,500 crore of funding will be provided by the buyers. But how it will be executing and whether or not the home buyers would be interested in paying off that much of amount and getting the project back on their track is a thing to watch. If we look at the valuations, they have corrected. And I think the management has given 20% sort of a revenue growth target, and they maintained it this time around also. But then more than that, how the margins will play out, because this time we saw 1.4% margin also because of not only on the PNC side but also on the real estate, which is going sluggish. So I think the overall margin will get impacted going forward. So I think it's a wait and watch. Valuations have I think let's see 1 or 2 quarters of top line, and let's then only I think we should start accumulating.
Sharmila, what's your sense? NBCC should be accumulated now? You think troubles are over?
That I think is the big question. So because of that, really my stance is neutral, because I think just to add to what Vineeta was saying, that definitely NBCC used to be liked because it had this sort of a niche on the kind of orders that they would get, and you didn't really see those orders going to anybody else. So in a way they were very secure as far as the kind of order book visibility that they could see. But execution has been an issue, as has been for a whole lot of companies. And I think even with this Amrapali is concerned, I would definitely take it as a positive that they're definitely not funding it. But at the end of the day, if the Supreme Court tells you that you need to complete the project, I don't really see any company saying no to that. The good thing is that they're going to get an 8% kind of a margin on that if and when the project gets off the ground. But I think those are the things precisely that you need to watch. One is how the execution follows on the projects they have on hand, and how this whole Amrapali thing also shapes up ultimately. So, of course, I think the first correction started when that whole Amrapali news came about, and I think a second correction has happened post numbers. So now I'm sort of neutral on the stock. I'd wait to see really how execution happens from here onwards.
Okay, that's the view that's coming in on NBCC. The second stock we want to talk about is Apollo Hospitals. Has done extremely well. If you see the numbers, 20%, 16% top line growth in the second quarter. If you see the profit, that was up almost 70%. Margins moved up 400 basis points, and both healthcare and pharmacy business did well in trade. Some of the loss-making hospitals are also turning profitable. So there was strong growth that came in this segment itself. So Apollo Hospitals, what's the view ahead? And it's one of the largest chains of hospitals in India. Vineeta, do you all have active coverage on Apollo Hospitals?
Well, we are not tracking it actively, but yeah, Apollo has been commanding a higher valuation, giving the the kind of profit stability, as far as stability on the top line and as well as bottom line is concerned. And the recent, I think recently the pledge issue has also been addressed. So they are selling around, and they will be getting around 300 crores in the Apollo Hospitals group after the sale of Apollo Munich stake, and that will help reduce the debt, which is not, I mean, not considerable. Out of 3,000 crores, some 300 crore will be utilized to, correct the debt. But I think it's good, and I mean, I don't see any very positive trigger into this company. Certainly, some of the hospital, they have invested into new projects, and their fixed costs are being covered. And now occupancy is the main issue. Already they are running around 40 to 50% occupancy for the new hospitals. So going forward, I think it's a business to stay on, and the profitability, top line, everything is stable. So it's run up a lot. I don't think there's a time to get into stock. Maybe wait for a correction or something like. I really don't have a clear view as in, whether we should enter into this
at this point. Sharmila, what's your sense on Apollo Hospitals? Do you like the numbers and you think that is the best bet to play hospitals in India?
Absolutely. I think first of all, complete thumbs up for the numbers. I think they really delivered a very, very strong set of numbers. And I think, hospitals by itself is a very attractive business when we don't have enough listed players in the space. And the other listed players, to name Fortis, etc., the valuations are also high and you don't know what is happening there in terms of, which way it's going to go for them going ahead. So I think when you come to Apollo Hospitals, you have a solid business where they're adding, beds every quarter. And you see that their occupancy is good. Then they have that whole pharmaceutical vertical, which also you can sort of play on. So to my mind, it's the best play really in the listed hospital sector play, but valuations have now run up post the numbers because this was a quarter where we were starved for good numbers. So I think everywhere where you got good numbers, the market sort of rewarded any stock which had good numbers and sort of good commentary, and Apollo Hospital ticked both those boxes. So I would wait for now, but definitely I think a thumbs up for this as a play going ahead.
Okay, Vivek, what's your sense on Apollo Hospitals? Is it something that one should accumulate after the run-up, or you should avoid this counter?
Well, for me, it is an avoid, and it is for a different reason. Notwithstanding the tremendous potential in corporate provided healthcare, hospitals, pharmacies, diagnostic chains, etc. So I'm not doubting the growth potential, but basically the dynamics of the business being very capital intensive. They need to set up new hospitals to sustain the volume growth. The business itself cannot generate more than 10 to 12% return on capital, return on equity on a sustainable basis. Even 10% actually for Apollo Hospitals has been a challenge, and here is actually one of the best players because Fortis and Vocard and others are much worse than even Apollo. So basically it's a structural issue with the sector itself. Now with low return on capital, low return on equity, if we look at, Apollo Hospitals, has a current market cap of like 20,000 crores on a annualized basis, about 1,000 crores of operating profit, and net profit of whereabouts of 200 crores. Probably this year they'll do about 250 crores. The valuations by no stretch of imagination for a business that generates 7-8% return on capital, return on equity, and probably no cash flow of positive free cash flows through a cycle or through a 5-year period, I think valuations are quite out of line. But not to say that it has done well so far, but I don't think either it will not sustain, or at least I prefer companies with return on capital, return on equity of at least 15% that's sustainable through a cycle or through a 5-year period. And Apollo Hospital actually certainly doesn't tick that box or tick that requirement for me. So I'll avoid Apollo Hospital. I actually avoid all the hospital kind of businesses. My preference within healthcare is the services side, the diagnostic chains, namely the Thyrocares of the world and Metropolis of the world. So I'll prefer that segment of organized healthcare rather than hospitals.
Okay, that's the view that's coming in. The next theme we want to discuss is the multiplex theme. Reliance on this AGM always comes out with disruptive moves. This time around, they targeted something in the movie space where they said that we will for people who are premium customers of Jio Gigafiber, they will be able to see the movie first day first show, the same day it releases in the theater, and that actually sent the stocks of PVR and Inox much lower. Obviously, clarifications coming in from PVR and Inox saying that probably they will not be screening such movies which go the OTT way. But nevertheless, that's something that we'll ask our guest. Sharmila, is theaters or multiplexes the next disruptive idea that probably will get impacted?
For sure, because I think that the way things have really progressed, you're part of the industry, you know better than any of us, that, the way this whole media space is now, where it is now from where it was about 4 or 5 years ago is very different, and OTTs have certainly disrupted this space. That said, I don't think that people will stop going, to the multiplex to watch movies, because, that business has again undergone a change where you had single screen theaters to now where you have multiplexes. So that model has also shifted. So now it is more of a sort of a evening out entertainment rather than just watching a movie. And so I think it's a combination of things. So definitely their model has changed. Maybe it will change further. But I think that's the way things are, and I think that if you have to just look at multiplexes, I don't think that this event can be a disruptor. So just talking of the two plays, I probably prefer Inox over PVR. And I think Bloomberg has done a very nice story on this, where they give the 2-3 parameters why Inox has caught up sort of with PVR in terms of ticket prices. The gap used to be a much higher. They've caught up on that. They've caught up on the food part of the business, which is a very integral part of an multiplex business, because the way you push your food sales gives you really good margins. And the average revenue per user, I think that's another parameter on which Inox has caught up. So they've got more theaters now, etc., etc. So and even in terms of valuations, I think even while the catch-up has happened, it's still, there is a gap between that and PVR. So I prefer Inox between the two. And yes, I think there will be disruption, but that doesn't really stop me from buying either stock.
Okay, Vivek, what's your sense? How will you read into the announcements that came in? Is it trouble, or would you take this correction as an opportunity to buy?
Well, short term, probably the trouble may not be as bad because Reliance is yet to launch this, and probably it is still 3 to 6 months away from launching, and we still don't know as to how it's going to play out. So, but I would tend to agree with at least Sharmila's point that it's not that they're going to be out of business anytime soon. So, it's not that the concept of going out and watching a movie in a multiplex will go away anytime soon. But again, my issue here is on valuations vis-a-vis the business dynamics. Multiplexes are again a capital intensive business like hospitals. Their occupancies in a best case scenario can be about 40-42%. Realistic, it would be about 35 to 38% occupancies, which need to sustain that business. Food and beverage is a very integral part which contributes almost 50% of the profits for most of the multiplex businesses. And if we look at historically, I mean 10-year average return on capital, return on equity, which is a very important parameter at least for me, for both PVR and Inox would be in whereabouts of about 10 to 12%. Lately, for both, it has improved and come to about 15-16% range for both Inox and PVR. But if we look at the profitability, given the market cap and given the capital employed, for PVR, I mean, what we have is about 6,500 crores of market cap for a profit which is of about 170-180 crores annualized basis. For Inox, it's about 3,000 crores market cap for about 135 crore of annualized profit. So from a valuation point of view, I don't really see much of an upside from that perspective. And God forbid if the disruption is much more severe because of Reliance, probably 2 years down the line, then certainly these prices and valuations will certainly not sustain. Market is probably going to take that correction much earlier and not wait for the actual disruption and the fracture in the multiplex business to happen. So I would just avoid it at this point of time.
Okay, Vineeta, what's your sense on this entire scene? How would you play this?
So one is Reliance is launching it from 5th of September, the fiber business, and this particular scheme I think should be from mid of 2020. Also, once this scheme comes up, I think, if we look at the top line of PVR or Inox, some 45% of the collection is from 4 to 5 big movies that they are doing. And they are big budget movies. For Reliance, I don't know how it will come in their plan, what will be the charging, because it will be for the premium customers and how they will be charging. It might get a little costlier for them because, those 5 movies, which are big budget movies, it will not be very feasible either to include it into the plan and how the rate chart would be for Reliance. Secondly, one is the other part is that just like what Sharmila said, that it's more of an outing part. And lastly, if you look at Netflix or Amazon also, so the top stars are making movies particularly for Netflix or Amazon. So if that comes for Jio, well and fine. But I don't think they are going to eat away the share into Inox or PVR. More than that, I'm more concerned as in how they are going to, they had big expansion plan for PVR also, some 1,000 screens they are planning. So if that plan is, and in this con call they have said that it will be difficult to, get into that big expansion plan because of liquidity concerns, etc. So I think I am more worried on that side, less worried on how Jio would be impacting PVR.
And which is a better
Inox.
play here, PVR or Inox?
Fundamentally, if I look, I like PVR. The valuations are costly, and Inox has been catching up on the fundamental side. But my preferred pick will be PVR.
Okay, you wanted to add something?
Well, about another, I mean, it was, I would say, a bravado on part of Mr. Ambani to announce first day, first show kind of on Reliance Jio network maybe in the next couple of quarters. One also needs to look at it from the film industry side, where the producers and distributors may want to give their movie to the Jio network for first day, first show, because let's also not forget that, as Vineeta mentioned, 4 or 5 movies in a year, gross couple of 100 crores, is a serious revenue for the film industry, also from the theatrical revenue share which comes to producers and distributors, whether Reliance can match that. That's number one. So if Reliance is unwilling to match that and play the big brother trying to bargain hard, probably the film industry may not cooperate with Reliance Jio in terms of offering the blockbuster movies on the Jio network in the first place. So in that sense, the multiplex players probably have some degree of protection, and maybe the multiplex players would align with the film industry guys to fight against Jio. I mean, that one really doesn't know how the fight will evolve, but this seems a likely scenario, or one has to keep in mind.
Okay, that's the view that's coming in on the multiplex situation, but we're timed out on this show, so we'll have to drop the last stock that we want to discuss. But with that, it's a wrap on today's edition of Hot Money. Let me thank all my guests who have come in for the show. Sharmila, Vineeta and Vivek, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.